You have probably heard of the concept time and price and the importance of time, but many traders actually don't know what time means and how it can be beneficial to your trading success. In this video, we will uncover all the time metrics that you need to know to improve your trading.
Before we get into the video, make sure you guys are following me on Instagram at Arkhamtrades. This is where you can reach me, as well as I have recently launched my mentorship. These are all the benefits that come along with it. If that's something you guys are interested in for $10 a month, that's the first link in the description or the first link in my Instagram bio. Back to the video.
What we need to understand is the market comes in waves. We're either expanding in the marketplace or we're consolidating in the marketplace. We expand, consolidate, expand, and then we consolidate, right? And how we can anticipate an expansion to happen inside of the marketplace is with time, right? This certain time, the market is expanding. This certain time, the market's consolidating, right? This certain time, the market's expanding. And this certain time, the market is consolidating. If you are not aware of time and where you are during the marketplace, it's going to be really easy for you to get caught up in these consolidations. A lot of traders go into trading blind. They don't know what the optimal time to trade in, so they end up trading at any random point of time of day, and they end up getting caught in these consolidation phases, meaning it's going to be a lot harder for them to actually find success because they're trading at the wrong time. It's important that when you're trading, you want to trade at the right time according to the right pair. It's important that you guys take note of these times. The Asian session kill zone, which is the Asia session, goes between 8 p.m. EST to 1 a.m. EST. The London session kill zones goes from 2 a.m. EST to 5 a.m. EST. The New York kill zone goes from 7 a.m. EST to 10 a.m. EST. The silver bullet, the morning silver bullet, goes from 10 a.m. EST to 11 a.m. EST. The London close goes from 11 a.m. EST to 2 p.m. EST. The PM silver bullet goes from 2 p.m. EST to 3 p.m. EST. And the last hour macro stems from 3:15 p.m. EST to 3:45 p.m. EST. And here we have our macros. We have 9:50 to 10:10 a.m. Then we have 10:50 to 11:10 a.m. EST. Then we have 11:15 to 12:10 a.m. 12:10 p.m. 11:50 a.m. to 12:10 p.m. EST. And then we have our PM macro, which is 1:10 p.m. to 1:40 p.m. And then we have the 3:15 p.m. to 3:45 p.m. last hour macro. And it's important that we note all of these time frames and understand what is a kill zone and what is a macro. The best way I can explain the macros and kill zones is from a job perspective. When you come into a job, you clock in at a certain time and you clock out at a certain time. It's the same thing when trading, right? The kill zone is you clocking in, and the end of that kill zone is essentially you clocking out. So since we know the market moves in waves from expansions and consolidations, it's important to take note that when you want to anticipate some type of expansion to happen in the marketplace, it has to be at certain times during the day. If it's not at certain times during the day, most likely you're going to get caught up in the consolidation, and that's not what we want to do. We want to be trading when we're supposed to be trading, when the market is moving. When we're not trading during these times, the market is not moving. The market is not presenting an opportunity. How are you going to trade when there's no opportunity presented? And think of the macros like during a job, right? If you're working retail or maybe you're working at a restaurant, there's a time that you clock in and there's a time that you clock out. And during that period, you understand that during this time, this is rush hour, right? You guys know what rush hour is? When a lot of traction or traffic picks up. And this is exactly how you can think of a macro. During these times, the market becomes very volatile and traction starts to pick up. So you're trading the New York session and coming into the London close. During these times right here, 9:50 to 10:10, then you got 10:50 to 11:10, then you got 11:50 to 12:10, right? During the time period that you're trading, these macros are like rush hour, right? A big influx of volatility will come into the marketplace. That's how you can look at macros from a rush hour perspective, right? So let's say you're trading the PM session, right? So from 1 o'clock to until 4 o'clock, right? These are the PM session macros. So if you're trading from 1 o'clock, right, 1 p.m. to 4 p.m., these would be your rush hour times where heavy influx of volume comes into the marketplace. So that's how we can look at the marketplace from a kill zone perspective, and then eventually into a macro perspective. And then we have our silver bullets. If you don't know what a silver bullet is, I have created a video already on my channel explaining the silver bullet and how to trade the silver bullet. But during these times of the day, 10 to 11 a.m. EST, and then 2 p.m. to 3 p.m. EST, this would be then your silver bullet. Basically, during these times of day, there is going to be an opportunity to catch a pullback for a continuation of the move into a drawn liquidity. So let's say this is the New York session, right? The New York session. So you're trading from 7 o'clock to 12 o'clock, right? If you're anticipating some type of pullback, right? If you're anticipating some type of pullback, most likely it's going to be during the silver bullet hour, which is 10 o'clock to 11. So if you're anticipating some type of pullback to then see a move higher, this is when you would expect that pullback to then take place for that continuation higher of the trend. Or let's just say you're trading the New York session again, but the market reaches an area of resistance up here and you're anticipating some type of reversal. You're anticipating price fine rejection, some type of reversal, right? You can expect the 950 to 1010 macro to come up, tap into that higher time frame resistance level, right? And then break lower. So this would be the rush hour, that 950 to 1010. That's the rush hour, right? It comes up, finds resistance, and then breaks lower. And then during that 10 to 11 o'clock, that would then be your opportunity to then look for a silver bullet, and then you would catch the pullback for a drop lower. I hope I was able to explain that in a way you guys were able to understand from the job and rush hour perspective. What's important that you guys take note of is that you trade during the optimal times based on the pairs that you're trading. So if you guys are trading AUD and JPY pairs, these pairs move primarily during the London session and the Asia session, and sometimes you could catch a move during the New York session. So when you are trading pairs that has these pairs in it, it's important that you trade during these optimal times, which is up here for the Asia session kill zone, the London session kill zone, and we have the New York kill zone right here as well. If you are trading USD pairs, it's imperative that you trade during the New York session and the London close sessions. So we have the New York session kill zone, 7 a.m. to 10 a.m. EST, and then we have the London close kill zone from 11 a.m. to 2 p.m. EST. So it's important that when trading USD pairs, that you guys trade during these times. And NZD and CHF, Asia session and London session present the best opportunities for pairs like these, right? And it's important to know when to trade these pairs during optimal times is it's correlated to their time zone. And that's why it's so important. The USD, it's much easier to trade the New York session for the USD pairs because that is early in the morning compared to London session, which is overnight. You know, not a lot of people can trade overnight in the United States, so it's much convenient for USD pairs to trade and move during the New York session. I did forget to mention the GBP and Euro pairs. These are very important, so you want to trade these during the London session and the New York session, right? So GBP and Euro The London session is during the morning for the GBP and Euro community, right? So London is early in the morning for them, so it's very convenient for them to trade the London session, while in the United States, that's practically overnight. So I hope you guys can see from that standpoint, right? The AUD and JPY, it's much convenient for them to trade the Asia session because the Asia session is early in the morning for people in Australia and Japan. So it's more convenient for them to trade during the Asia session and going into the London session. And for the NZD CHF, same exact thing. It's more convenient for them to trade during the Asia session going into London session because it's in the morning for them rather than having to stay up overnight trading the New York session. It's more convenient for them in the morning. So what you don't want to do is you don't want to trade outside of your pair's primary time zone, right? So this means you don't want to trade USD pairs during Asia session because most likely the volatility will not be there. You don't want to be trading GBP and Euro pairs during Asia session because by then the London session, the New York session, and the London close has already came through, so a majority of the volatility has already went. And you don't want to trade pairs like CHF during the London close because by then the Asian session already came out, the London session already came out, and the New York session already came out. So by then the volatility has already been dried up. So it's important and imperative that you trade your pairs according to the time zone that is most convenient for them. And here we have a depiction here for the Asia session. We have the London session, we have the New York session open, and then we have the London close. And this is for GBP USD. Remember what I told you guys, right? It would not make sense for you guys to trade the Asia session for a GBP USD pair because the Asia session is not convenient for them, right? The Asian session is not convenient for the British pound or the dollar. So what happens during the Asia session? The Asia session consolidates, right? The Asia session doesn't move, it consolidates, it practically is accumulating here, right? And it's not until we get into the London session do we then see this massive drop lower. As you guys can see, coming into the London session, we get this massive move lower. Boom, really, really solid. And we can anticipate a move like this to happen and a massive drop like this to happen because we're trading the London session according to the GBP pair, right? If we're trading during a time zone that's convenient for our pair, it makes sense to expect some type of move, some type of volatility to come into the marketplace. And then coming into the New York session, since this is also a USD pair with a GBP pair, the New York session does have volatility from the USD counterpart. So as you can see here, after London session closes, we kind of just consolidate here. As you guys can see, we kind of just consolidate, moving back and forth, literally consolidating. And it's not until we get into the New York session do we then see a break higher, come back into this last down close candle right here, this order block, and then we see this overall push higher on the GBP during the New York session. So that's coming into the New York session. And then after the New York session closes, right, we get this time zone, which is that silver bullet. Remember the silver bullet? We talked about if we're anticipating some type of pullback for a continuation lower, it is during this time from 10 to 11 a.m. EST for the silver bullet to then take place for that pullback for a continuation lower or a continuation higher, right? If we're anticipating a pullback for a move higher or lower, your best bet is to wait for that 10 to 11 o'clock hour for the silver bullet, and that's exactly what we got here. You see how we pushed lower here, and then we gave this pullback, and then we continued going lower. As you guys can see here, a little fair value gap here. This would then be your silver bullet for the 10 to 11 o'clock. And then after 10 to 11 o'clock ends, that's when we get into the London close here. And as you guys can see here, we see price come lower, sweep these lows down here, right? Price come lower, sweep these lows, finds a measure of support down here, and then we see a push higher during the London close. And then we kind of just consolidate here, and then we continue pushing higher during that PM session macro. Remember what I talked about the PM session macro from 110, right? From 110 to 140, which is about right here. From 110 to 140, which is about right here, right? Remember when I talked about rush hour? This is exactly what we meant, right? The market kind of just, going higher, lower, higher, lower, and then once we get into that macro time, specific times inside of a kill zone where an influx of volatility kicks into the marketplace. So from 110 to 140, we then see this massive push higher, right? Remember the rush hour analogy I gave? So from 110 to 140, volatility kicks into a marketplace and the market spools. Essentially, the market moves and we get this massive move higher during that macro hour. And then we kind of just consolidate here going into the Asia session, right? So I not only covered the Asia session kill zone, the London session kill zone, the New York session kill zone, and the London close, but I also talked about the silver bullet as well as the macros that you guys want to be paying attention to when you guys are trading. If you guys are anticipating some type of expansion to then take place into the marketplace, to then get you the best high probability trades, it's imperative that you understand the value of time and that you are trading during optimal times of days. Because you not trading during the optimal times of days, that's imperative to your pair, can hinder you as a trader and hold you back. So it's important that we are trading at the right times, we're clocking in at the right times, we're catching moves at the right times, and we're being patient and waiting for those opportunities to present themselves at the optimal time periods for us to then get the best quality trades. So that's going to be it for a video. As a tangent, I did launch my private mentorship for $10 a month. If that's something that you guys are interested in, we have more in-depth lectures on a lot of topics from bias to liquidity, plus journaling, psychology, pre-market, post-market analysis, as well as live trading every single day. So if that's something that you guys are interested in, that's going to be the first link in bio or the first link in my Instagram bio description. I'm Arkham. Be safe.